The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent day at the headquarters of technical trading and investing. It is TFNN.com, where I come to you each trading day between 2 and 3 Eastern Time, and, of course, 24/7 on Channel 14 on Tiger TV. So you can always catch me later, or maybe you can listen to me twice. Maybe I didn't get through the first time. Maybe I'm going to have to beat on you 2 hours a day. In one of those hours, just a repeat to get through what I talked about on the first hour. And what can you say? Anyway, we've got a market that has been a little bit down, a little bit up. And right now we're off 3 points on the S&P cash, 1.73 billion shares. And we are getting toward the end of options rollover. Of course, we had options expiration on Friday. It takes about a day, day and a half, sometimes 2 days to get options rolled over for the end of the summer and into September. Normally, you've got a huge inflow of options being written come September as everybody gets back from the hiatus over the summer. Of course, I'm thinking that maybe with all the world events, especially with the commodities moving, that we're getting a little bit more movement out here today, and probably a little bit more engagement, at least from the street, than we would have. Of course, we've got a big week for IPOs and some of the other stuff going on. So as today unfolds on the show, we will be looking at it. But I think a lot of people put far too much importance in the actions from a Monday and a Tuesday behind an options expiration. I kind of remember World War II and all the wonderful submarine movies out there. And one of the things that the German subboat commanders knew, that after a depth charge went off, all those bubbles in the water, echoes, all that kind of stuff, made noise for a good minute or two after the last depth charge went off. And they had a minute or two where they could change directions or fire up the engines and go full blast and try to move out of the way of the destroyers trying to sink them, because it took a few minutes. And I always think of this kind of day after, 2 days after expiration, as that there's a lot of noise in the water. You really can't hear. You can believe a lot of the action in there has some meaning. I think it, depending on what it is, it can have meaning. But a lot of times if a stock moves up or down 50 cents, it's probably just noise. And especially it's noise on Friday during expiration and the next 2 days. The purpose of market makers is to put a little bit of pressure on the market, both up and down, get a little movement. You got to get some things shaken so you can get some positions in and out, or you're going to pay up. And part of the ability for the market to have high volatility comes on days when there's a lot of movement underlying the options. Those option market makers will come out and either push out soft news like upgrades or downgrades that are basically just ways of trying to move the market. They could do it after the close of the day if they didn't want to move the market. They could do an upgrade at 4:02 p.m. and see if there's any real movement. And the answer would probably be no, because everybody knows that it's just a game. Probably less of a game since everybody got their hands caught in the cookie jar in the analyst game of 2007, and just outright lies. I remember, of course, you'll see him from time to time now on CNBC. He's trying to rehabilitate himself, but he has the Business Insider website. And this was the guy that why he was saying Amazon was going to 1,000, and like 12 years later, he was right. But he said he was going to 1,000 in the next year, was writing emails saying what a smoking turd Amazon was. And you can only talk out of the two sides of your mouth. Actually, he was excommunicated from the market. He can no longer be a market professional. He can be a market pundit, and that's what he does now. But that whole idea of being independent and having a firewall between the analyst side and I think anybody's dreaming if they think that actually happens. So we do see a lot of upgrades and downgrades, either in expiration and or during rollover too, and basically anything to keep a market moving and keep the rubes involved in probably non-profitable trading. But I digress. Anyway, we've got an interesting day out here. And again, off 2 points, 1.75 million shares. I'm not going to get all in a lather about any kind of movement out here, maybe some specific stocks. Don't see that much changing at the moment. Probably the most interesting thing is the XLE. We talked a little bit about that last week. It looked a little bit bloated. On this day in 1997, the stock exchange begins quoting share prices in sixteenths. And they call it the teenies. In theory, this is supposed to narrow the spread between the bid and price and ask, or bid price and ask price, increasing the net return for investors. But on Wall Street, the law of unintended consequences governs almost everything. And what you see is seldom what you get. In practice, the move to teenies makes filling large orders a good price much harder, raising the cost of mini trades, especially for institutions. And, of course, they got away with that until the SEC forced them into pricing in pennies. And that pretty much collapsed that whole market and brought along the high-frequency traders and bigger computers until they could actually make money. So what can you say? Okay, one of the other things moving out here that we have not discussed yet, but we will, is the Russell 2000 rebalance. All of the updates to the list of additions and deletions will be out after the bell tonight. And what we're seeing is kind of a little bit of a pre-market jitters. They work on a fairly easy to figure out rule book of what comes in and what comes out. And the idea that there's probably going to be huge moves based on this, probably a little bit overrated. What we can tell is that by their own rules, they will be taking out the stocks that had the biggest runs. So energy, and I think that's probably why we're seeing a little bit of pressure today on XLE. You're probably going to see those come out, or at least somewhat tuned down in the Russell, all the different Russell funds. You're also going to probably see more stocks like tech that have not run come back in as bigger percentages. So they may not move all these in and out, but they certainly will change the formulation of what stocks are in. And of course, there will be some new ones, and some of the old ones will come out of the move. But through the rest of this month, including to June 30th, we're going to get all the Russell 3,000, 1,000, 2,000, and mid-caps indexes. The final membership list is posted. But between now and then, they'll have already changed all that for the fund, at least the fund money that they cover. But some of it's already known. It is fairly easy to figure out if you look at the ground rules that are fairly predictable in it. So I don't expect that we're going to see a great deal tomorrow, although a lot of people are talking it up on a day where you've got an S&P that has changed, 2 points. It's been up and it's been down. Just about anything to talk about on a day like this can be made into a mountain from the molehill that it is. And I don't think we're going to see a great deal before the end of the day on this, especially volumes not saying that we're in for any kind of big move. We certainly did go up, push the top one more time in the S&P cash. I don't think that changes a lot. Mr. Schiller's out, and he has some new data. Of course, this is Schiller with his housing index. He also, of course, was part of the Black-Scholes revolution in actually putting together options pricing models. Also part of the huge long-term capital management team. But he's got a thing called CAP, which is a cyclically adjusted price earnings ratio. And he says right now it's unusually high, right now at 26. Historically, it hadn't been that high many times in history, 1929, 2000, and 2007. So at least this one shows what we know, which is cyclically, when you look at a lot of these stocks, they are fairly high in that range. And, of course, makes a lot of sense with interest rates at zero. What happens when they actually start moving them up? As I've said before, I think that pretty much the Fed is waiting for the day after the elections in November, and we'll go right back to raising them, and everything that they say up to then has absolutely nothing to do with the truth. And I think everybody else knows that we're seeing inflation, and we saw the huge move in gold, basically called a bovine excrement on her claim that there was no inflation. And I think we'll continue to see that. But he's basically saying he's getting and ready to sell his equity shares and that he is nervous. The IPO tsunami, of course, is happening this week. Yesterday when we met, it was about 16 IPOs. By the end of the day, it's 19 IPOs. So we have a bunch. I don't know how many of these are going to make it out the door. A lot of them are extremely questionable. A couple, I think one came out today. Another questionable China stock. And we're going to probably see a great deal of these. I imagine anywhere from 6 to 8 could not make it out the door. And the question is there any cash left at this point to get into these IPOs, when for the most part they have not been performing very well after the IPO? And a handful of them have, but for a great deal of these IPOs, there's no chance that they're going to be making money anytime soon. A lot of them are pharmaceutical, biotech stocks that are going to take 3-5 years before anything happens, and they're probably going to have to go back to the well for cash several more times. So I can't see a lot of deals. And my guess is that the street will really pump and push and pimp the GoPro IPO when it does come out on either Thursday or Friday. But other than that, probably not going to see anything really move up. But the GoPro kind of looks like the dangling the shiny keys in front of the baby. Well, come on, just keep an eye on these. Just don't look over there. Just over here. Just keep your attention over here on the GoPro thing. I have a feeling that, as I've said before, probably over hyped and overpriced, unless they can vastly and quickly move out of only making durable cameras for high-action sports. That's probably a little bit. When we come back, we're going to be talking about Facebook. You can give me a call at 877-927-6648, and we'll get to yours. You can also post a message in the den, and, of course, you can email me at pat@tfnn.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, interestingly enough, Gallup did a poll over the last week or 10 days. Reported that 62% of 18,000 Americans surveyed said that ads on Facebook and Twitter do not influence the purchases they make. Of course, instantly, Zuckerberg came out and dismissed it. I can't say that this is a hit piece. Normally, you can look at the questions and ask. I did see and look on Gallup's website and found the questions that they ask. And I didn't think that they were leading, like, do you still beat your wife kind of questions, stuff like that. Or how many times have you cheated on your wife? I mean, all those leading kind of questions, which a lot of times polls are designed to get a response that the poll person that hired the poll company to come up with to begin with. It's called manufactured news. It happens a lot in the press. They want to push an agenda. And I'm going to get into that in a little bit here today because it just is a good explanation of how the press thinks it wants to push something, or it's easy to push and no one's going to say anything and it fills up airtime. But anyway, they're up 87 cents today. Everybody's come out, said anything about it. My question is, why would they pay up for the app, WhatsApp, if they didn't still have problems of engaging, especially teenagers? Of course, Facebook says we've got numbers way up from Facebook and teenagers before. And the only thing I can say is that teenagers used to sit behind the desktop and do all this stuff for hours at a time. And now they do it on mobile. and why they may be more engaged because they're not just doing it while they're sitting in front of it. The time of engagement is a great deal less. And most of the teenagers I look at are doing more things with Snapchat or Twitter or some of the other stuff that they're working on than Facebook. I'm not saying Facebook is going away, but probably the high water mark of the flood of Facebook is long over. And it doesn't mean that they're going out of business soon. But I have a feeling that it's just awful heavy to be something that you put on your smartphone. And that's most of the teens are using their smartphones so that they don't have to come home and watch their parents hover over them. What are known as helicopter parents. But it's interesting that it is up today. But a lot of pushback from the street for that Gallup poll, which it's not been the first time that this has been questioned on whether advertising truly works. Most of the advertisers early on with Facebook complained, especially on Madison Avenue, that it did not work. We know a lot of the bigger companies did take off. And it depends on what you think works. Maybe trying to sell General Motors cars to 16-year-olds probably doesn't work. And the amount of engagement, the average age probably means that maybe if you have teenage clothes, maybe you're going to be and find a much better target market than Facebook. But Facebook is not television. It's not a shotgun. It may be a rifle to very small demographics. And I have a feeling that we're probably going to see more of that in the next year where they say, yeah, we can focus Facebook ads at specific people, but it's not going to be, the 800 million users they say that they've got all the time. If you have been hiding this morning, you did not see the Dubai crash. The Dubai stock market did crash. It's been coming down on a tear, actually down 27% in the last 8 weeks. This had been telegraphing a lot of problems. In fact, I was talking to Andy yesterday about who would be the biggest loser in the Iraqi deal. Well, it's pretty interestingly, it's not the oil companies, but it is the builders. A lot of people were spending a lot of money in Dubai building things in Iraq, and it looks like they're probably going to lose a lot of that investment, if not all of it. But it looks like we're going to see some bankruptcies in Dubai, which they don't like. In fact, the last time there was a big round of bankruptcies in Dubai, they found 30 or 40 Lamborghini Contacts and all the other Murcielagos. They'd been sitting there for 6 months in the parking spot. In fact, eventually there were so many of them that the people couldn't get parking spots. They had to be dropped off because all these Murcielagos were sitting in the parking lot. They just drove them there, got on a plane, and left before they could be thrown in jail, which is what happens to you in Dubai when you go bankrupt. Anyway, we'll talk a little bit more about this when we get back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
It's often hard to tell what starts a world war or what will start a world war. The assassination of Duke Ferdinand in World War I, or just all the other contributing factors in World War II. It's hard to tell what makes a market crack, but certainly we're seeing the Dubai stock market, almost all the huge building companies that went there under pressure. And, of course, one of the bigger ones looks like it's going to go bankrupt. That was enough for, at the low, I think 8.7% off the entire Dubai stock market. And it recovered, I think, about 1% before it closed at 6 a.m. this morning Eastern time. But I am showing a chart of that, and you can pretty much see it, what's going on. Of course, today we were up about 5 points. As soon as a Syrian warplane dropped a bomb in Iraq, that was pretty much over. And we're seeing probably additional pressure as things unravel in Europe. I've been watching a lot of these equities we've been talking about probably since mid last week that had been very, very light in the energy sector. So not really surprising that we're seeing some pressure in that sector, but there's probably going to be some spin-off that we hadn't thought about. I didn't think a lot about Dubai's construction industry not getting any checks because everything goes into the crapper in Iraq, but things happen. And, of course, we were talking a little bit before we get into stocks today about just how important it is for the press to push an agenda. The one I'm getting shoved down my gullet over the last couple of days is just how soccer is the world sport, and the U.S. is ready to turn, and everything's going to be soccer. I actually threw up a little bit in my mouth getting spoon-fed this pablum this morning. So I went over and checked just what were the ratings in the United States for the U.S. game, which probably, at least I would think, would be the highest-rated game in the United States for the World Cup. And, of course, everybody doing it. And, of course, someone was pushing Buffalo Wild Wings as it's going to be just the most wild Super Bowl-like blowout quarter for them. No one could get into a Buffalo Wild Wings, somebody said this morning on CNBC. But is this a press story, just like a lot of things that the press loves more than Americans do? So I looked up the ratings, and what do we see? Well, last Tuesday, NCIS had a rerun. And so as a percentage of that, the number one show on America, what would we think that would constitute a big game in America turning for soccer? Well, I think, maybe a Super Bowl, maybe something like that. But what do we get? 1/4 of an NCIS rerun is the amount of people watch. It was about like 2.6 million people, 2.8, something like that. But if you had to just put a magnifying glass on the zeitgeist that is news, you would think everybody was playing it. And, of course, is this really a sport that America would go for anyway? I went over to Buffalo Wild Wings at lunch today just to check out the lay of the land, and there were about 8 guys sitting there at the bar. And, of course, all the screens were on the only game playing right now, which was, of course, World Cup soccer. No golf, no nothing on a Tuesday. Basketball's over, hockey's over. What else can you do? There's nothing going on except baseball, and there were no baseball games on. So everybody's watching it. So I asked a few people up and down the bar what they knew about soccer. There was one guy that was head over heels soccer, and, of course, he wasn't born in the United States. The rest of the people said, well, they really didn't know anything about it, but nothing else was on. And, of course, I was there for 45, 50 minutes, watched most of it through halftime. By the way, they don't have any good-looking cheerleaders on the side. I'll tell you how far it's going to go in America. But at the same time, what you had was a game that was 0-0 and probably going to end in 0-0. I didn't spend any time seeing how the game finished. But to me, I don't know if America, with its short attention span theater, would ever be able to watch a game like this. This makes baseball look fast, makes hockey look like it's running in at 50 times speed. And the lack of scoring, how can you do that? Now, I've gone to big football games, as they call it, over in Europe, got dragged over to it in the 90s. And I don't think they talk a lot about what really goes on in the background with the hooligans fighting, people in blackface, Germans coming over to have rumbles with the English, with swastikas painted on their faces. It's a lot dirtier than a lot of people think, but they're not showing that on TV much out there. I did dig at some websites that showed the dirty underbelly of soccer. And if they can push this horrible thing on us, what's coming back next? Disco or super crappy world music with, 80 people on the stage, all making a huge, loud racket of noise, totally unmusical. So there's a lot of horrible things out there in the world, and I'm the man to judge. Soccer out, world music crap, I'm sorry. But I'm not buying it, Mr. Big political reporter in the morning about how great soccer is. Your ratings aren't there, and at the same time, it put me to sleep. Anyway, what else do we have going on here? Is that it? It is a mad, mad, mad market. I've got that off my chest, so we can go forward, young men, on to upward and onward. What else did I have? Oh, I wanted to get into stocks that were some moving. And we had a couple of questions in the den. Again, you can email me at path@tfnn.com. You can give me a call at 877-927-6648, or you can pass a message in the den, as some have done. And I'll try to get to them today. It says, in your view, are there any of these 4 stocks that are good rally speculations? I don't think so. I'm thinking that if we are going to rally, that you would probably be looking at a rally next week when fund buying comes back. I see absolutely nothing out here that doesn't say that we're going to at least get a small pullback or a larger one. So I would be looking back into probably, might get some Friday. I seriously doubt it. My guess is that fund buying will be Monday the 30th and Tuesday and Wednesday and maybe into Thursday of next week. I think that there's very little to hang your hat on, a lot of economic news to move this market. And this market's been incredibly slow when there hasn't been some kind of catalyst to move it along and squeeze a few more shorts out the door. But to me, you've got 19 IPOs. I suspect a lot of these are going to burst into flames before they get them out the door. There'll be that one good GoPro that they dangle in front of everybody like keys in front of a 3-month-old to, and that'll be it. In fact, I'd be looking at whether or not we have a traumatic event following things like what we saw in Dubai. Maybe Qatar, some of these other countries are going to start seeing a contagion from that. A lot of cash going down the tubes. And when I was talking to Andy last night, maybe he'll talk about it today, was very interested to see just how much and how big of an investment China has in Iraq. And China is just the kind of country to send in a bunch of people, maybe 100,000 people that are doing a whole lot anyway over there in China, part of their military, and protect all that cash they put in. They built their own runways to fly their own people in to make sure all those wonderful oil pumps keep pumping, and they gave a check to the Iraqi people for it. They really don't care who they give a check to, and maybe not even a check at all. And, of course, it doesn't look like we're going to do anything. The foreign policy looks firmly as lead from behind, which is basically hide in the foxhole, or, as they say in the military, back in the rear with the gear. Nobody's going to be the tip of the spear here in the United States, at least in foreign policy. So I suspect that we're going to start seeing some movement. Anyway, wanted to look at a few stocks that were moving out here. There's Chinese soldiers already there, but I'm thinking, another 100,000 of them or something. Did have some questions on FYE. So we'll look. Maybe there's something settling up. I just don't see anything right now. Maybe you get a little bit of movement out of one of these stocks for the Russell balancing, but I don't see a great deal out here. One question is FireEye. Nice little pop out of here, but boy, certainly not a lot of volume in the last 14 trading days on this. Let's see, SPLK. Splunk. Oh, Splunk is getting in a war of words with several other companies too. Let's see if we got anything in this. Well, certainly looks like a short to me. You went over the last high, May 28th, 5.7 million shares, and what do we have yesterday? 3.4, 2.7 today. We'll see how the today ends up. Twitter, TWTR. To me, this one would have the highest likelihood of probably finding its way back into a Russell rebalancing. Unfortunately, not a lot of volume in this one, and seeing gap down on decent volume and left that gap open. What was that? 38 million shares. And of course, you came down with heavy energy down to 29.51 and haven't tested it yet. I really don't see any kind of catalyst. out here that says anything on Twitter. Workday is probably the company I like the best out of all that John from Philadelphia posted then. I haven't looked at this one. This thing, 1.9 million shares out here today, going up against 7.9 million shares. We have just under 1 million right now, but even the stronger day on the 19th had 1.2 million shares against that 7.8 million share high. And doesn't look a lot to me. In fact, energy kind of coming out when we look at the last two legs up. If you look at my power law vector indicator, 3.5 off the bottom, 2.5 up here, that we went over the May 28th high at 87.24 with 7.8 million shares. Wimpy. I want to see some juice. Can we see some movement? Anyway, I wanted to take a quick look at what we had here. Okay, S&P off of 5 points now with 1.95 billion shares. Volume picking up a little bit during the trading hour here. Still not huge to run home, but off 5 points. I think maybe we finally are starting to see a little bit of nervousness over the Mideast, and maybe it's starting to creep in. Other stocks out here, CCL came out with earnings, said that they were going to be able to raise their prices slightly, but they had a much better opportunity to push the stock in the morning. Of course, it's down really from yesterday. Not a great deal out here. Not a huge move in Carnival, but always a weak season in the summer for cruise ship operators. And getting a lot more business going to Australia now and getting out of Mexico, which is extremely problematic for them. And, of course, that means that you have to pay a pretty big airfare to get over there, at least from the United States. But that was the two interesting things I picked up from Carnival. C-Trip down on heavy volume. And that's why I'm kind of wondering about how these Chinese stocks are looking. It has repaired itself a little bit. I'm trying to remember the headline on this one. Downgraded on Air China ticket commission cut. So they're going after their margins out here. Air China ticket commission cut. Air China cuts commission, no big deal for C-Trip. And Cunard's also hurt too. But another good one up here, $61.09 from the October high, 3.1 million shares. This thing busted it with 1.6 million shares. Not a big riddle out here that this thing hit previous highs with a lighter volume and is rolling down lower, although people are still in a froth. Anything. Can we just change the .com with China now and just say if you can put .com in it or China in it, that it's a big change. Frontline, FRO. We'll be back and look at this in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
And we're off 6 points on the S&P cash, 2 billion shares on the New York Stock Exchange consolidated tape. This means that we did go above the previous high, going to close probably below it, and going to be on lighter volume. And I think you've probably got to be just a little careful that we don't see, especially with the lack of any real direction from the State Department and the current administration, that we don't see events continue to spill out of control, whether they're on our southern border or whether they're in the Mideast or in the Ukraine. Not a lot of leadership right now. And, of course, evil always loves a vacuum and comes right in. So I would be kind of worried right now that without a definitive policy to put a cork in it, that we're going to continue to see continued weakness on this. And interesting to see, the movement in gold. We're starting to see a market that is aligning up with all kind of interesting movements out here, especially in the energy sector. Of course, I wanted to look at that XLE today. And like I said, maybe you can't put a lot of weight behind today's movement, but certainly tomorrow. Now, what I would be looking for as confirmation is to see either the 9-day simple moving average or particularly what I like, which is the 3x3 displaced moving average, but both of them are going to be close. Have not been broken yet. So I can't put a great deal on this. I want a little bit more confirmation. We could go below this and do a double repo, which is not beyond the scope of reason. A double repo is something like 10 or 15 days above the 9-day moving average closed below it for a few days, closed back above it, and the next close below it is normally when these big parabolic moves fall apart. And that's probably, they're not a great deal of many ways to play these and be safe, but that is one of the ones I like. You can use the parabolic SAR sometimes, but to me, I think this is, we can show that here. I'm going to put my mouse over it because it's so light, it may be tough to see. But if you're looking to catch parabolic breaks, even then the parabolic SAR would be back down at about 99, so a buck lower. And that's probably where you see the first weakness. Maybe we get something like weakness over the next 4 or 5 days, maybe a little push into fund buying next week gets us back over it. And then we see what I've been thinking, which is a break of this market somewhere after the 4th of July. Of course, world markets and, of course, world events may be pushing this a lot faster. And maybe if the United States would get actively involved, I would see this a little different. But normally, until some big people get involved, a lot of these brush fires turn into all-out big, huge headaches. And so we'll be watching that. But interestingly enough, we're not quite there. No real confirmation yet. But I'm watching these things incredibly close. And maybe Andy will talk a little bit about what we were talking about yesterday and his views on it, because we were kind of typing at each other. But it'll be interesting. But sent him a lot of charts. So I think he's kind of getting ready to put a finger in the air and see which way the wind's blowing. And we'll continue to watch on that. But see how today closes. If we continue to see pressure out here, and maybe we close 10 points down on the S&P cash and get a little bit of run, a little bit of momentum, that may be all it takes to break this market, at least for the short term. Probably see dip buyers come back in one more time, and we gets us into fund buying the 4th of July weekend, and maybe then the next big break of the market. At least one way to handicap this market. Look at the scenario. Anyway, we've got Andy following me, my stalker, and we'll see you tomorrow, same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.